Hi everyone. Today let's talk about some of the world's biggest economies. Then we'll hit all the usual data and charts, as well as my results for the week and thoughts going into next week. Do me a quick favor and like and subscribe and hit the bell to help out the channel. And let's get started. So they're talking about Goldman Sachs and their view on the US and Japan as the countries to wait the most over the next 12 months. But let's take a look at why they're talking about it. And they are mostly looking at economic data. We talk about PMIs every time they come up on the economic calendar. You can see that 50 line here is the cutoff. If it's below the 50 line, that's negative growth. And if it's above it, then we're still doing okay. And you can see the US was doing really well. This is the COVID dip and then the COVID recovery where we were growing very fast. And since then, growth has slowed significantly. And now we are moving back towards that 50 line. Eurozone recovering, but not quite there. US right at the line here for 2024. And then looking at manufacturing services and composite here for the United States, you can see we had that decline, touched that 50 line, and now we're improving back into the 52s. Manufacturing is continuing to lag a little bit, but it is still growing. Overall, the US is doing quite well from an economic perspective. We've seen those numbers improve, and we've talked about it for a while. And then they get into the potential places to put your money. You can see safe bonds not seeing a lot of flows, whereas equities are expected to be positive in the future. And you can see that risk on percentage. And they highlight it here. You can see US investors are moving from safer assets into riskier ones like stocks. So we're seeing that flow, that movement towards risk on, which is pretty interesting. So we have an economy that is moving back towards growth after the weakness we saw post-COVID recovery. And then they talk about some potential room for opportunities. If you haven't been watching these stocks, you definitely haven't been watching this channel. We've been talking about the Magnificent Seven pretty consistently, and we will talk about them again here today. We'll talk about that composite chart, and then obviously tech as well as semiconductors all have been quite strong, and they should continue to do well as long as that economic perspective continues to do well. And if you are interested in going overseas, the Nikkei Semiconductor is an opportunity, as well as the Euro Quality, potential opportunity for some of those overseas growth. The Eurozone seems to be lagging a little bit, but it is moving in the same direction as the United States. Moving over to this inflation chart, I just wanted to highlight it. I've been seeing it floated out there several times in Game of Trades is who posted this on X. You can see they're mirroring the 1966 to 1993 period with the 2013 to present. You can see very similar structure. We had a dip low previously, similar to what we had here, and then we had that big spike in inflation. Had a pretty consistent downtrend, which is what we're seeing here, and it remains to be seen if we get this kind of bottoming formation with a higher peak later. But right now we're pretty heavily correlated. There's no way to know if this is going to happen, and you can see it did take a very long time for it to get to that second peak. That's from 1975 all the way to 1980 here. So that would mean about 5 years from current. So that would put you around 2029, 2030 timeframe where we would see that second peak. Obviously, you would start to see the run up a little bit before that, maybe 2026, 2027, we start to see a little bit of a rise potentially. But just keep this in the back of your mind. It is floating out there and it is pretty well correlated in my opinion. Otherwise, moving over to the normal data, starting off with fear and greed, you can see we were at 77. A week ago, we were at 77. So this is pretty minimally changed. Still in extreme greed here for momentum and strength. Similarly, breadth starting to trend a little bit higher, but it's in regular greed. And nothing else has changed here. We also saw the VIX break down a little bit as well, and bonds all still sitting in extreme greed. There's really no fear in markets, and we still see markets going higher just about every day, it seems like. Moving over to the AAII survey, you can see the bulls did step up by about 2%. Interestingly, though, we did see the neutral section step up to 32.2. This was prior to that big run on Friday. You can see this is from the 28th. I would expect this to be even more bullish in next week's readings, depending on what we see earlier in the week. You can see the bears are very, very low. It's interesting that they don't track historical lows for the bulls and bears, but I would expect this to be relatively close to that historical low. And we are well below historical averages, 10% below almost. So definitely lots of bulls, which is a little bit concerning, but like I said, price seems to go up every day. Moving over to seasonality, I think it's going to be interesting going into the first parts of March here. Monday, Tuesday, pretty bullish or sideways chop. And then after that, we do start to see a little bit of weakness into the second and third week, as well as that third week options expiration. And then we see that dip low here traditionally on the 15th based on the data. And then into the end of the month, you see a little bit of strength. So overall, positive on the month. but it's going to be interesting to see how weak this is here in the mid-month. Remember, the dashed lines are the election years, so more volatility in election years during the March period. And then moving over here to the calendars, you can see Friday was expected to be bullish, and it was. Monday expected to be a little bit bearish like we talked about, and then bullish into that Tuesday period. And then after that, you see flat to down the rest of the week. A bit choppy into your options expiration on the 15th, which was your bottom based on election years. And then it's a bit bullish into the end of the month. Moving over to the economic calendar, pretty much nothing here on Monday. Looking at Tuesday, we have global services PMI expected to be at 51.3. You also have non-manufacturing prices and non-manufacturing PMI also expected to be pretty decent. And then on Wednesday, we have JOLTS report, Fed chair talking to Congress. That's going to be interesting, as well as the ADP non-farms. This is an employment week, so we're going to get that jobs data. And then going into Thursday, you have the European Central Bank making an interest rate decision. That'll be interesting. They are currently expected to hold current levels. And then you also have Fed Powell talking again on Thursday, as well as Fed balance sheet later in the day. And then going into Friday, you have GDP for the Eurozone, as well as your non-farm payrolls, participation rate, as well as unemployment rate, all at 8:30 on Friday. So lots and lots of data, as well as Fed Powell speaking. Moving over to Max Pain, you can see Max Pain sitting down at 502, so not very different from this week's Max Pain. Current stock price way above there. Look at this put wall at 500. Total options, 1.1 million. This put call ratio, though, super high at 3.32. That's way higher than we've seen. You can see it here, all these puts in the market. So seems unlikely that markets are going to go lower, at least for this week. And then your call here at 510, already above that. Top of the puts in that same range where we are already, 513. You can see we're already at 512. So not a ton of upside potential, but it seems unlikely that we're going to go lower. Moving over to the charts, starting off with the S&Ps here on the monthly chart, you can see the momentum and RSI are both bullish. We closed above that long-term trend line. You can see that was the trend that marked the top here in April of 21. Some bottoms here in September of 21, and then you can see we did chop through that zone quite a few times before ultimately breaking down from that level to the next one. You can see we have now broken out here. It's pretty interesting. We'll see if we can make it to that next trend line. Typically we do not, and you can see zooming out here, the only time that we've made it to those upper levels of trend is back here during the dot-com bubble. So massive run there. Eventually pulled back to the lower trend. And then you can see 2008 crisis, COVID dip, which looks fairly mundane relative to these other runs that we've had. You can see it a little better here. Dip low, all-time high, dipped again. Now we have a new all-time high, well above that trend line. Let's go ahead and add another one at that previous high. We'll see if that gives us a level worth looking at. That would put us up to 555.50 or so. See if we can get to that level. That would, again, be a very substantial run from current prices, but it doesn't seem impossible. And like I said, anytime we get into these upper levels, we eventually see a pullback. Moving over to the weekly chart, again, similar thesis, big bullish week last week, closed up 1.66%. Similar thesis, closed up 0.95%, so almost a whole 1%. Again, that trend line sitting up there at 53 here on the weekly chart. 5,300 certainly seems within striking range. Momentum bullish. Again, just look how super overbought we are. We do not get to these overbought conditions very often. The last time we got to super overbought here on the weekly chart would be that pre-COVID high where we hit that trend line and then broke down. And you can see we are at that level again. That was an RSI read of 79 and then current RSI read 76.90. So very overbought. Getting into those ranges certainly seems possible, but just keep that in the back of your mind. Moving over to the daily chart, you can see this consistent trend that we've been in. We've been hovering around that midline for a while. We did break down from that level to the 9, and since then we've been rallying close to that trend line again. 515.94 would be that level. Momentum bullish, RSI bullish. That's the current price target, 515.90 or so. We'll see if we hit that trend again, and then we'll see what happens. If we break through, 530 would be that next upper level, the same level that we saw on the weekly chart. So right now, a little bit of short-term resistance. We'll see if we can break higher. Moving over to the SPY on the monthly chart, you can see we are getting very close to that third ATR band, sitting at 518. And you can see the last time we hit that ATR band, it was sloping higher, so we did grind along it for a while, and then eventually pulled back into the mid-range. It does happen eventually, but momentum still bullish. And we haven't seen any volume pops here recently over this most recent run. Going back to October, no volume pops, which is interesting. So right now, resistance 518. We'll see if we can get to that level. And then moving over to the weekly chart, you can see we are very, very extended. We are way above that third ATR band. That does not happen very often. You can see last time we did it, pre-COVID high, just like we talked about on RSI, super overbought. In terms of these indicators, third ATR band is currently sitting at 597, and the 9 EMA basically sitting on top of that third ATR band. This has been a historic run, and it seems like it's set to continue. It is worth noting that volume-weighted MACD is starting to pull back a little bit. And that does take a while to follow through, but eventually it does. You can see here from July, it did eventually pull back, and we did see that pullback. But right now, we're still seeing higher prices with the MACD starting to roll down. Moving over to the NASDAQ, you can see we did get a bullish month, 5.29% in February. Big run. You can see we're back into overbought conditions here on the monthly chart. Trend resistance sitting just a little bit higher at 18,600. That would be about 300 points higher from current levels. And then major trend resistance to the upside, way higher than current levels. You can see last time we got into that range was again during that dot-com bubble. We got into that level, got up to this next trend line, establishing that level, and that is the only time we've been anywhere near that peak. And it's really just the same trend line set up at a higher level. You can see with this next lower, we at least had 2 interactions on the way up and the way down, but we have not been into that trend line ever since then. And it does seem possible we could get there over the next several months, but it would take a while in my opinion. And that's if it happens at all. You can see we might have gotten there on this previous run, and eventually it did pull back to that 55 EMA. So if we see a move like that, 55 EMA sitting down at 12,900, I don't necessarily think that that's going to happen, but it does seem like we could get a pullback at some point. And then moving over to the weekly chart just for a moment, you can see that upper trend line here, mark the top here in July, mark this kind of interaction in September, and we are right at that trend line now. So hitting that resistance, we'll see if we can break higher or not. Remember this level, 18,300. We are right there right now. Momentum bullish. RSI, again, super overbought. The NASDAQ is a little bit more volatile. You can see we hit overbought conditions here in July and hovered in that range for several weeks before breaking down. Eventually, the breakdowns do happen, and we are right in the range now where you would generally expect topping. Moving over to the daily chart, you can see we did break that midline on this most recent trend we've been seeing. Hit these tops several times. We didn't quite get to that upper trend line in mid-February, which was interesting, but at this point you can see clear breakout. Seems like we're headed to that upper level. That would be 450, 54 or 455 or so, right in that range. Momentum bullish, RSI bullish, so everything still looks strong even with the very overbought conditions. Moving over to the Tasty charts for the NASDAQ, you can see we were already at that third ATR band last month, and we are well above it now. So continuing to go higher. You can see on this run from July of 2020 all the way to the peaks here in October of 2021, we were basically riding that line for a long time before we eventually saw that pullback in 2022. So keep that in mind. We are at that level. You can see the line starting to slope higher. We could absolutely grind along that line for a while. Let's look at it on the weekly chart. You can see we are definitely above that third ATR band. Very powerful rally. Momentum, bullish. Got another step up on the volume weighted MACD. So clearly nothing overhead, continuing to look very strong. And then zooming in here to the daily chart, interestingly, we are not at the third ATR band on the daily chart, so that's probably giving you a little bit of room there. Third ATR band currently at 449.62, which would give you about another 1% move from current levels. Seems like the daily ATR has actually been holding up a little bit better. Overthrew it here in November with that powerful run, and since then we've been respecting it pretty well. So right now, upper level, 449.62. Moving over to the Russell, you can see we had a very strong week, 3% to the upside, took out this previous high, so looking very strong. 206.50 is your next level, above that 208.22. Momentum bullish, RSI bullish. Everything looks very good here. You can see even on this most recent pullback, held that 200 SMA. That 200 SMA has not held pretty much all year. You can see we've been chopping right through that level several times. You can see we saw a little bit of a hold here at the 55, saw a nice bounce, and then ended up falling right through that level. And then we had a very deep cut. That was a third test of this level going back to June of 22, as well as September of 22, and then here in October of 23. and since then it held super powerful run, headed much, much higher in my opinion. Really right now I would say the price target is that 212.10 level, which is your peak high from March of 22. Moving over to the Dow on the weekly chart, this is a pretty crazy chart. Just look how many green candles we've had with very, very few red candles. You had one here on the beginning of January, and that was basically flat, 0.59 to the downside, and another one here in mid-February, 0.14, so again, basically flat, and then every single other week on this run has been bullish. So what a very powerful run, and you can see 2 weeks ago, 1.32%, and then this week, 0.01%, so basically flat. We'll see if we can push up to these trend lines. This is obviously all-time highs here for the Dow, so still looks strong. We'll start to add some levels as price action dictates this week. Current trend resistance all the way up around 400, which is obviously a major psychological level. Price has continued to go higher despite the MACD rolling down, RSI super overbought. So again, indicators showing weakness, but price action is king and it continues to go higher. Moving over to the equal weights here on the weekly chart, this has been one of the laggards of the group, not quite as much as the Russell. The Russell still has a long way to go to all-time highs, but the Dow, the Nasdaq, and the SPY have all been making new all-time highs, and sure enough, here we have the equal-weighted S&Ps finally headed towards that all-time high. The peak high is that 164.87 level. We thought we would head towards it on that break 2 weeks ago, and then this last week, another strong week, 1.19%, headed towards 164.87. So continuing to look strong, momentum bullish, RSI overbought, but looks good. You can see we hit overbought conditions here, and it lasted for a long time, continuing to make higher highs as RSI continued to decline, which should have been a pretty good indicator. You had very powerful divergence at this peak, eventually did follow through, but we are getting into that zone here now, and it seems like we're going to overthrow it and start to make some new all-time highs with no clear overhead resistance beyond that 164.87 level. Moving over to the ratios, you can see the SPY was starting to underperform this week. We thought we might see some follow through based on 2 weeks ago, and then this week ended up being quite negative, down 2%, coming off of resistance and a clear lower high. See if this area starts to break. It does make sense to me that the Russell would start to outperform, starting to play a little bit more catch up. So I do think the Russell is strong here. And then similarly to the Russell, we're seeing NASDAQ outperformance, so SPY playing the back seat a little bit this week. NASDAQ back above 355, so looking strong, back above these previous highs here from February of 21, as well as the peak in November of 21, breaking out back above that level. Obviously not an all-time high, that goes back to 22 January, but it seems like we're headed back in that same direction. So Russell and NASDAQ showing strength. Moving over to SPY divided by the M2 money supply on the monthly chart, I just wanted to give you some reference here. You can see this 22.23 level has been a critical point. Marked the COVID high, marked the all-time high, and then marked this recent high in July. And then we rallied through to the all-time high for current price. Obviously not on this chart, this is the ratio chart, but remember this price here on the SPY is all-time highs, and we are definitely in bubble territory. In my opinion, you can see the last time we were in this range was your dot-com bubble. You could argue this might be an AI bubble. We'll see how much of that comes to fruition, but it is showing bubble style moves. And if you look here, we are right now at the highs here on this ratio from August of 97 as well as October of 97. You can see we did end up going higher all the way up into that 2820 range. You can see I don't even have levels up here. I never thought we would really get this high again, but this is definitely bubble style movement. We eventually had a really strong down move, 15.5% in August of 98. That was pretty quickly reversed over the following months. Chopped here all the way up to about 32 is the high for this. The actual high is 32.78, but really this closing base is 31.71. And then eventually this pulled all the way back down into the 14 range before we found a solid bottom and then started to rally again into that period here before the great financial crisis, which pushed us all the way down to 822 on this ratio. So pretty interesting there. Just understand that this is likely bubble territory and it will likely come back eventually, but that doesn't mean you can't play it here in the short term. Everything continues to look very powerful. Next level here for me would be 25.91. We did break this most recent level of 24.49. Let's go ahead and look at this on the daily chart so you can see it a little bit better. Got above that level on the Friday session, so clear breakout, looking very strong. No overhead resistance in the short term. Moving over to the Mag 7 here on the monthly chart, very strong month for them as well, 15.5% in February, very, very powerful. You can see we are headed towards that upper trend line, which would be 389.50 or so. Hit that trend line here in August of 20, held it for a while, got a big wick higher, and then eventually broke back down to that 55 EMA, ended up bottoming here at 128.18. So that's an important level, and then we've rallied very powerfully from there. Momentum bullish, RSI bullish. You can see just how long we've been in overbought conditions on this chart. Mag 7 has been super, super powerful. Let's look at it on the weekly chart as well. You can see we did break above that trend line this week, and then you have that next upper level, like I mentioned, as resistance. Super bullish momentum, RSI obviously super overbought, up at 81.11. You can see this previous wick high on RSI was an 83.81, so almost as high as we've been here recently. Let's go back to this other peak, that was an 80.46, so this is a very high level for RSI, even for the Mag 7, but again, structure very bullish, RSI with a clear trend breakout. Get into some individual stocks here, starting off with Apple and Tesla. Apple continuing to hold that 55-week moving average at 178.54. Did test that level here. Momentum bearish, RSI still bearish, big bearish volume on that candle. Significantly higher than what we've seen here recently. So keep that in mind. Definitely looks weak in my opinion. And you can see that 179.96 level had been holding for many, many weeks. We've tested it several times. Closed just barely below it with that big wick low, clearly breaking down. Hit the highly traded zone. We'll see what happens now, but this looks significantly weaker now on Apple. And then Tesla, pretty positive week, 5.56%. Hit the 9 EMA, finding some resistance there. Momentum moving towards bullish. RSI moving towards that SMA. So very clearly still a downtrend on the weekly chart, but I do think it looks okay on the daily chart. And we've been talking about Tesla for a while. Seems like we're going to get back up to that 214 range at some point, but it's been in a holding pattern for a couple of days. Moving over to AMD and Netflix, some of the best gainers on the week. You can see AMD up massive, 14.8%. Momentum bullish, RSI is bullish, obviously. This is all-time highs here for AMD. They topped out at around 300 billion on the market cap, massive for this company. You can see we'd been in a multi-week consolidation. You can see a clear breakout at 184.29, and then once we broke that level, it was straight up to the next trend line around that 200 level. So very, very powerful move. Everything looks good here on AMD, continuing to look strong. If we make it to that next trend line, that would be up around 240. I don't think we're going to get there anytime soon, but who knows? It's been a massive run. It could continue for sure. AI at this point seems like a bubble, in my opinion. We'll see if it comes to fruition in terms of profits and all of that. But in the short term, it does seem kind of bubbly. Netflix breaking out here as well. 614, next level, 693. And you can see here, this is kind of that head and shoulders, very big head and shoulders for the all-time high, left shoulder, head, right shoulder before that biggest breakdown, which was obviously massive here on Netflix. But we are back into that range, headed towards those all-time highs. At this point, it seems like we can get there, headed towards 700. Again, some of the best gainers on the week, looking very good. Moving over to staples and discretionary, we did see a continuation of risk on here. Both of them were pretty bullish 2 weeks ago, and then this week, massive move on discretionaries, 2% to the upside, where staples pulled back 0.43. It's been a good run for staples, and it's still bullish in terms of structure, but you can see risk on definitely happening. Next level, 189.39. Momentum bullish, RSI bullish, whereas staples are continuing to kind of hover around that 74 to 75 range. Moving over to energy and oil and gas. I've been talking about these for a while and then I kind of came off them, but I do want to highlight the pretty strong run they've had. 4 weeks in a row of bullishness, broke above 140.88. Looks clean to 145.92, and then above that I have 154.13, which is your highs here from September of 23, so looking very strong. Let's go ahead and extend out that trend line. You can see we're back above that, tested it last week, tested it 2 weeks ago, rallying up back above all the EMAs and SMAs on the weekly chart, looks clean. And then energy, similar thesis, breaking out above the December and January highs. Next level, want to see it hold 87.37, finally tested that level. I've been calling for it for a while, and then looking to that next level, 89.89, kind of at that neckline here for this previous head, and then 92.80 would be the next level above that. So overall, energy, oil, and gas, one of the lesser loved sectors in the market, and both of them look pretty good going into next week. Moving over to breadth here on the 20 and the 50-day average. This is what's a little bit more concerning to me. We are continuing to make all-time highs and see everything go up, it seems like, but 20-day breadth not at its peaks. You typically want to see it get into that zone and hover. We're not there yet. It does seem like we're headed in that direction. We're above all the EMAs and SMAs, momentum bullish here on the weekly chart. We've been talking about the daily chart looking pretty strong, but the weekly looks even better with that strong momentum headed towards bullish. So it seems like we're going to get there at least another week or two of bullishness. And then we'll see if we get a consolidation and then a breakdown. Typically takes a while to happen on this chart. Once we get into that range, you can see many weeks here, and then again many weeks before we eventually broke down. Doesn't happen every time. You can see a couple of instances where we pulled back fairly quickly, but then even with those moves, it did take a few weeks to really get going before we saw those lows. So overall, I would expect this to get into this range and then hover. And then looking at the 50-day, big wick low, finding strength, confirmation candle to the upside, follow through here, momentum ticking towards bullish. We'll look to see this push back up into that 83 area and potentially that 92.25. I wouldn't expect to get there. I would expect a lower high on this run, but it does look bullish, at least in the short term. Moving over to breadth on the 200 SMA chart, you can see this one has been significantly less convincing. It was actually down last week just a little bit. Have not gotten above that 76.04 level. We've tested it multiple times. Typically on your more colossal runs, you see it get above that level up into the 92 area. You can see we topped out around 97% here in April of 21 before we had that bigger breakdown. We're not anywhere near that yet, waiting for that kind of topping culmination around that 92 area. Momentum bullish, RSI kind of hovering in the mid-range, but technically bullish. So a little bit interesting consolidation, a couple of weeks in a row, not breaking out, not getting into those extreme levels. Moving over to yields just for a moment, I wanted to highlight again that these did fall pretty strongly this week. Momentum bearish, RSI bearish on both of these. I think this is pretty interesting, especially with the most recent inflation data. We'll see how this plays out in the March meeting and the comments, potentially from Jerome Powell this week. We'll see how that plays out. But right now, yields are going lower, and that is helping equities. Moving over to the dollar here on the hourly and the daily, you can see we did have a big wick rejection. The dollar did show a lot of strength on Thursday, then pulled back significantly on Friday. Let's go ahead and look at the longer time frames. You can see that is 2 weeks in a row of bearishness coming off of that wick high. Still holding the 55 EMA and still holding that 103.64 level. So I would expect this to hold a higher low and then rally from here. We'll see how that plays out. That could take several weeks to kind of come to fruition, but you would expect a return to that trend line up around 106. Momentum still technically bullish, but just holding kind of in that same range that we've been in for a few weeks. Not super convincing. And then RSI, it was actually ticking down, still above the SMA, so that's technically bullish, and it is above the 50 line as well, so technically bullish there, but mixed signals for sure. 2 bear weeks on bullish indicators, still holding some support but not really breaking out either, so nothing convincing. Continuing to watch and monitor the dollar. Moving over to bonds on the weekly chart, you can see J&K has been in this range for a long time. We got here in the middle of December, and we've been sideways chop in that same area for a while. Nothing changing here on J&K. TLT, on the other hand, looking very good. Broke above that trend line. Bullish week 2 weeks ago, bullish week this week. We're right at that 21 EMA, so 94.64. See if we can get above that level. That would be your current resistance. You also have VWAP sitting at 95.61, so just a little bit of overhead resistance. Definitely mixed signals. 21 EMA held. Very bullish indicator for me. I love this setup. I talk about it every time. Big break of the 21, pulled back to the 21, held that level. Looking strong coming off of the 21. So that is bullish. Like I said, I like that move. That is one of my favorite setups. And I do think we can push to that 96.50 level as long as yields continue to look weak, which obviously will be affected by all those external factors that we already talked about. Moving over to volatility here on the weekly chart, you can see we did have 2 bearish weeks in a row. We're still holding well above that 1275 level. And really these most recent lows were around 1230. We're not in that range, which is interesting. So we're technically holding higher low, coming off of that wick high around 18 or so, but momentum is bearish. RSI below the 50 line but above the SMA, so a little bit of a mixed signal there. Overall, to me, short-term bearish until we start to see ticks higher again. And looking at that on the daily chart just for a moment, you can see that trend line broke. Next level, 1275. We'll see if that holds. But momentum bearish, RSI bearish on the daily chart as well. Everything looks weak on volatility, which means equities are going higher. Moving over to my accounts, you can see I did pretty well. I think I was up around $1,300 or 1.3%. So continuing to participate to the upside. Nice little move there. In terms of options going into the Sunday video, you can see one covered call here, IWM 4206. Looking to collect about $1.20 on that. I think I'm going to be okay. And either way, I don't think we're going to see a massive run here. That would put my max profit at 207.20. And then I could roll this out to Wednesday if I need to. And then on the Qs, I have a 444 put. That's in a little bit of a loser. And then a 444 call here for $2.25. That's in a little bit of a profit. And that does give me some solid protection here as well. We did see a small fall at the end of the session. Talked about that in the Friday video. Again, everything long-term looks still bullish, but looking to collect that money, 225, very solid. For a single day, that would put my max profit there at 450 on the day, just on these covered calls, and then another 75 cents here on the puts. We'll see how that plays out. And then looking at the TQQs, I have a 61 put here as well as a 61 call for $3. That's already trading at 63.13. Max profit there, 64.12. So about $1 of potential upside on that position while still giving me solid protection. And then a 61 put as this call is already deep in the money. So we'll see how that plays out. Again, everything's super bullish, but watching for some potential short-term indicators of some bearishness based on all of the overbought indicators that we saw across the charts. Let me know down in the comments section what you think of the charts or any of the economic factors that we talked about. Is the US economy actually recovering and headed into a growth period? Are we in a bubble? And what will Jerome Powell say to Congress this week? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.